finally, someone on CNBC is positive about Tesla, and maybe not for the reason that you may believe. Although this is a good reason to be positive on Tesla, I don't think it's the biggest of all. Here in this video, we're gonna look at this clip, obviously, but we're also gonna talk about Tesla stock in 2024, what's coming next for our markets, go over some interesting charts and statistics. This market is truly an anomaly, if you will. What we are seeing right now does not happen all too often. Ultimately, is this a buying opportunity for Tesla stock investors, or should you wait for lower prices? But first, before we get into all of that, hit the like button and subscribe to the channel because it is free 99, and let's get rolling with this clip.
Let's talk first about what's happening now with Tesla's CEO, Elon Musk, already a billionaire, I don't even know how many times over at this point. Is this just another distraction with OpenAI and this lawsuit?
I think it is, Dom, and I think the market will quickly turn to other issues. I mean, I thought the more important news was the announcement that they are reducing or adding incentives in China and to lower prices and increase demand. But, you know, his distractions would probably put most of us under the table, but he just moves on. And I was at the Mega Factory, thanks to the folks at RBC this week, and there is a lot of promising stuff going on at that company.
What exactly is the promising stuff? And we already know that you're bullish, and we know that you're long the stock, and you have a vested interest in this stock going higher. But what makes you that much more bullish? What did you see that made you feel like this is something that you want to keep on accumulating?
Well, so the Mega Factory makes battery storage, basically utility grade battery storage. So these big walls of batteries that will really change the way that electric utilities operate and should reduce outages, as well as all the forest fires that we've been seeing over the years. In the Master Plan 3 presentation that Tesla made a year ago, they estimated that battery storage could account for 35% of total fossil fuel reduction. That's versus 21% for the car. Add to that, they only have a 15% market share, but they have a cost advantage of about 30% due to their vertical integration efforts and cost reductions, obviously. And so this is now the fastest growing, most profitable business at Tesla, and some estimate will be worth 1.5 times the car business in the not too distant future.
What that's a huge thesis for the bull side of things. One of the reasons for the downside as of late over the shorter to medium term for Tesla has been the concerns about China. Hyper-competitive market out there right now. We have a lot of maybe even price wars, you want to call them, going on over there right now, and a slowing EV demand picture here in America. How does all that counter out? And maybe the price does reflect why those issues have become more front and center.
Yeah, no, it's a real concern. I mean, we initiated our position during the last distraction, which was the X acquisition. We bought it last January at about $105 a share. And that was a short-lived distraction. And so I think what you have to pay attention to with this company is where is the technology going and where are they going to see the growth? And if they can grow this business half as fast as they think they can, it will solve so many problems with renewables and the usage of renewables at, on a 24-hour per day schedule. And so they are already monetizing it to a great degree. It's a nascent industry. So I really think that's where investors are missing some of the focus and what they're reacting to the headlines on the slowing EV demand around the globe. And I get it. I mean, I just leased a car in the UK and it was a nightmare trying to find the charging stations, or, not being familiar with the territory. So
Sure.
They're not for everyone. But I think we learned people want to buy Teslas more than they want to buy EVs.
Was it just me, or was that a breath of fresh air? Holy moly. Finally, someone is positive and constructive on Tesla. See, there's this weird thing that happens in psychology. We all know it. You buy low and you sell high. But as nothing changes too dramatically with an overall trend of a company, Tesla, it's growing. It's still growing. Let's be honest. You've went through a very dynamic moment in time where the Fed has to raise rates aggressively, and that directly hurts Tesla's customer Not necessarily Tesla. Tesla has enough profits, enough generation of free cash flow to continue to fund their operations. Tesla's not a small cap company, but the demographic in which that buys Tesla, which is every person on the planet, is faced with higher interest rates. And that is really something that Tesla has not been faced with in their business history. So of course, Tesla stock is taking a bit of a beating. But has anything really changed? Has the Tesla product got worse? Has Tesla's management failed? Yeah, you can make an argument that they've not exactly done things to promote shareholder value, sure, but I don't think anything has dramatically changed that derails the investment thesis. But the difference is, back in 2021, when Tesla stock was $400 per share, everyone loved it. Everyone loved it. It was the darling of Wall Street. Don't bet against Elon. Don't bet against Tesla. You have to own this stock because EVs are the future. Fast forward 3 years later, and it's exactly the opposite. You've never seen this degree or this volume of pessimistic investors around Tesla. Now, this dynamic that I've just went over is also complicated by the amount of money in the system today, the highest amount of money you've seen in the system in a long time. 2021, there was more money out there, but still, let's be honest, things have not dramatically changed that much. If anything, there's more investing capital out there in the world that could go into markets. There's $6.2 trillion in money market funds. And as we get closer to the first rate cuts from the Fed, there's probably going to be more money that gets pulled out of our markets and into money market funds, specifically treasuries, to lock in those long duration 5% yields or 4.3% yields, wherever the 10-year treasury is currently at. But inevitably over time, there's going to be more money coming back into our markets. And that is a problem, at least in the current marketplace, because there's not a lot of liquidity. Liquidity is stretched thin. I mean, very, very thin, okay? Let's be honest there. Who's really out there buying stocks? A lot of the volume you're seeing is trading algorithms, and they're reacting to earnings estimates falling. They're reacting to all of the negative sentiment on Tesla. But a lot of people don't realize Tesla is going to raise prices when rates come down. It's simple. If you are selling Tesla right now, you are selling at potentially the worst possible time. Before, again, over the next couple of months, yields where treasuries, Fed funds rates come down, and Tesla raises prices. Margins will go higher from here. Yet the expectation is Tesla's never getting back to 20% plus gross margins. And I think that is ludicrous. With this dynamic in mind, and the stretched liquidity, investors, they're selling Tesla and they're chasing other areas of the markets, most notably AI stocks. Now, is that a bubble or not? I think to some degree it's probably a bubble. Your semiconductors, your hardware, AI is probably to some degree in a bubble, by which I mean it's pricing in many, many years out to the future. And as this chasing has been happening, you've really seen Tesla get stretched liquidity-wise. I think here over the next coming months, you're probably going to see some give back of that AI trade. As I mentioned in the last video, if you guys have not seen it, actually 2 videos ago now, March 12th is going to be a big day with the ARM lockup period. You're looking at potentially 1,000% dilution at the bare minimum, probably 100% dilution if SoftBank were to sell 10% of their ARM position. And I think that can give a little bit of a give back, if you will, to your AI stocks, and that can free up money to move elsewhere. Now, the markets will also start to chase your catch-up trades. You've already seen that start to happen if a company has good earnings and they're interest rate sensitive, but I think you're going to see this in a much larger scale. And let's be honest, there is no more interest rate sensitive company than Tesla. There is no other more interest rate sensitive company than Tesla. Now, I think the Elon, management team, right? Elon and the team itself, they've not really done things to promote shareholder value. They could have done a lot better in communicating margins and what their plans are in the future. But I think that's the good part about where we are now with Tesla. None of that is priced in. So even slightly good news right now for Tesla can be really, really good news. I think the bigger question is really what happens with the economy and what happens with inflation. If you were to make a bet right now, I would say the highest odds would be the economy weakens from here, at least partially, but probably doesn't enter some kind of full-blown recession or deep recession at that. And in that scenario, rates fall, Tesla can likely raise prices as monthly payment costs fall, and it's kind of a win-win for Tesla. But the thing you want to watch out for is when recession fears come about in the markets. Typically, the markets price things in ahead of time. So if it looks like we're heading down the course or the path of a recession, stocks would get hit just based on a higher probability of a recession actually happening. And Fed rate cuts, they wouldn't save the markets. So I think that's a bigger problem throughout 2024. But then again, it is an election year. And by the time you get any hints of a recession coming, the Fed's going to be dramatically cutting rates. And again, that will be very instantaneously positive for Tesla. Also, when rates are higher and you can get 4 or 5% in money markets or longer duration treasuries, then you're not willing to pay as much dollar for dollar for company earnings or for growth. See, let's say 10 years, if you collect 4% a year, you're going to make 40% risk-free and keep your principal. If Tesla is offering FSD, potentially robo-taxis and humanoid or non-humanoid robots over the next 10 years and could see massive growth, well, that's great. But if you can get 4% risk-free for 10 years, 40%, then you're going to assign a lot less of a value to, let's say, Tesla's long duration growth story, right? So when rates fall, that becomes more attractive. If, let's say, you can get 2% in a 10-year treasury, 20% over the course of 10 years, that's not very attractive. Thus, you may be willing to pay a little bit more for Tesla stock. And I think that's something that happens late 2024, if not early 2025. That is around the time, if you're going to see some kind of recession-like event, it's going to be like summertime. And that's when the Fed would start to cut rates. Again, by then, you're going to be in full-blown campaign political mode heading into the election, and that's going to be very politically incentivized to start reducing rates as well. But my point is, at some point, the markets will not look at bad news as good for stocks. Eventually, you will get a really bad non-farm payroll report, maybe a negative one, and the markets will puke. They will throw up, and stocks will probably fall 3 to 5% in a single day, because the worst fear the markets have is a recession. So I am expecting some kind of recession-like weakness in our markets, especially if AI stocks do start to give up and fall a little bit. Let's be honest, how much of the S&P's rally here has been based on AI? A lot of it. Let's be honest, probably the last 5 or 10% of this rally has been directly correlated to AI stocks like Nvidia, like Microsoft, like Google. And now some people deem Apple is kind of getting into that field as well. I mean, a lot of this rally has been AI stock focused. And I think a lot of people forget 2022. 2022's 38% decline on the NASDAQ was due to recession fears, right? Just fears of a recession in 2023. And if we start to get those fears that come back, I don't think the markets are priced for that downside risk. But some areas are. That's the weird phenomenon right now. Small cap stocks, they're 22% off of their all-time highs if you look at the IWM. If you look at Tesla, Tesla is, let's say, roughly 50% of its all-time highs, or off of its all-time highs. I would say Tesla's pretty appropriately priced for a recession. So I think if you do get markable downside in 2024, it doesn't have to hit your already, sensitive areas that have priced in a recession. It might be a big tech kind of oriented sell-off like event. And again, March 12th could be a big day for our markets. You will also have CPI that will be coming out on March 12th as well. Now, if you look at Tesla stock on a monthly chart, you can see a very clear inverse head and shoulders pattern. Here is the first shoulder, here is the inverse head, here is the next shoulder. Now, typically, once you break this neckline, which is right here at about 210 or so, you can get some explosive upside. Now, if you do see AI stocks take a little bit of a breather and nothing changes in our markets, we don't get bad data, the Fed doesn't scare us next week, non-farm payrolls don't scare us next Friday, or anything else that happens from now until March 12th, maybe that event where ARM's selling off and other AI stocks selling off could actually be positive for a stock like Tesla. But a big reason why I am buying as many shares of Tesla as possible, I do think profitability will improve. I think margins will improve, especially towards the end of 2024. And even if they don't markedly improve, maybe go from 17% to 18%, but nothing too like groundbreaking or too crazy, maybe 17% to 17.5%. I think the markets will start to imply, as Elon Musk and the Tesla team starts to communicate better, that margins will continue to improve. That narrative alone is very powerful. Right now, we have no idea if margins are going to get better or worse, or if Elon's going to cut prices, because they haven't clearly said they're done cutting prices, that margins will get better. They will raise prices as rates go lower. They haven't said any of that, but I think that is their true intention. Could I be wrong? Obviously, I could be wrong. That's just judging based on what Elon has said, that it's more important, what the monthly payment is. And if that's true, then it really doesn't matter what the price of the vehicle is. It really matters on what the monthly payment is. Fed starts reducing rates, that monthly payment falls. Right now, you can get the lowest priced version of the Model 3 rear-wheel drive for about $35,000. If you don't put any money down, that's about $650 a month. That's high, but that's not too crazy. If rates were to fall, let's say 2-3% from here, you could be paying $450 a month. That's kind of on the low side. And if you put some money down, it's going to be even less. It's going to be like $400 a month. Tesla can and likely will raise prices at that point. And I don't think Tesla raising prices is priced into Tesla stock at all, let alone what this woman said in the beginning of the video of the energy storage business that could be huge for Tesla. Now, I also believe the markets will come to realize the potential of FSD and the future robotaxi network, as well as humanoid robots. Although I believe FSD is probably going to be recognized by the markets a lot sooner, because let's be honest, V12 is changing the game for FSD. Really, since 2021 until now, the last 3 years, you have seen so many improvements to FSD. You're getting close to the point where you could actually launch a robotaxi like network in select cities. Right? At least they are getting to that point that could probably happen. Yet nobody has paid attention to that at all. That is what Tim Cook and Apple said, his words back in 2017. Autonomous vehicles are, quote, the mother of all AI projects. I don't think it gets bigger than that. Just like Tim Cook said as well. What kind of value should be assigned to that? I would say some, at least. Tesla stock today is assigning zero value to that. Or I should say markets are providing zero value to FSD technology. Thus, I think Elon probably gets a new compensation package that has some very high tiers, 5 or 10 trillion market cap value for the higher end tiers, with likely a contract that extends into 2030, 2035, maybe even 2040 to keep Elon as the CEO in the time being. And that is all possible because now we have the shareholder litigation that is essentially over with. We'll see if the Tesla team appeals the the $6 billion request for 29 million shares of Tesla stock. We'll see. I'm sure Tesla does, kind of reject to that, and they go into some kind of delegation process. So we're not over with that, but it's pretty close. And I think at that point, for all obvious reasons, Elon and the Tesla team are really going to start focusing on shareholder value a lot more. Thus, by emphasizing their progress on AI and maybe throwing out some targets for the robotaxi network and what that could look like down the line. You could also say that the Tesla team may focus more on the $25,000 vehicle and what that could look like. Right now, we have zero clarity on any of that, besides that it could launch in 2025, but still, that's the end of 2025. That's a little too far out there for the markets to start pricing that in. You could also say that the Tesla team and Elon could get a little bit more optimistic about the business of Tesla and where margins might go next. Take, for an example, Apple. Apple has not grown revenue in 5 quarters, but Apple has maintained profitability. They've grown profitability. It's not about deliveries. Deliveries are not the reason Tesla stock is down 50% from all-time highs. It's not. They've been fine, just dandy and peachy. The problem is profitability. Now, if the Elon Tesla team can start to forecast better profitability, which they have not done yet, then Tesla stock pretty immediately starts to do better from there. Now that this shareholder litigation is over, Elon will be incentivized to get Tesla stock to go higher. And let's be honest, Wall Street is so negative on interest rate sensitive names right now. Still, it's quite ridiculous. Goldman Sachs' David Kostin says WACC, the cost of capital, is still too high, even for small cap growth. Not expecting Russell 1000 growth to return to 2021 highs, even if the Fed cuts rates. That's why I think even by the end of 2024, Tesla stock could be close to, if not at, all-time highs. All it really takes is the, Elon and Tesla team to get their act together and start, projecting what their plans are next. I mean, I think they have some pretty good plans, but we have no idea about them. We have no idea what their plans are for raising prices again for Tesla vehicles. Raising prices. A lot of people are going to say, hell no, Tesla's not going to raise prices. Indeed, they will. It's all about the monthly payment. But we don't know that yet. Thus, we will be forced to price in higher degrees of profitability in especially 2025 as rates start to fall, and that can really expand Tesla's multiple. Even Adam Jonas with Morgan Stanley expects Tesla's multiple could hit around 170 by the end of this year. Adam Jonas has a $345 price target on Tesla stock, but he only expects about $2 of EPS in 2024. That would be 172.5 times multiple. I mean, what if Tesla's profitability increases? What if we get better than $2 of EPS in 2024? Yeah, it could be a lot better than most people think. And as everyone is chasing these other stocks, they've completely forgot about Tesla's potential. And I'm here to remind you that things are relatively fine with Tesla. They are not as profitable as they were because of interest rates. Simple. It's so simple. It's stupid. Interest rates fall, Tesla raises prices. Margins improve, and Tesla's stock goes higher. I think that happens by the end of this year, but hey, I could be wrong. Maybe we enter into a recession. In that case, Tesla stock's not going to do that well. I think Tesla would hold up a little bit better than, a semiconductor name or a big tech name, because Tesla's priced for already bad news. So when you get bad news, when a recession comes, you're already kind of priced for it. Whereas I think the areas that have been leading this market higher as of recently are not priced for some kind of recession-like event. And let's be honest, people can say, tech or big tech is more or less sensitive to the economy. That might be true. But 2022, nobody was saying that. And ultimately, I think towards the end of this year, Tesla's AI potential will be recognized a lot more by the markets. It's easy to hate a stock when everyone else is hating a stock. It's hard to hate a stock when everyone's loving a stock. That's why people laugh at Nvidia bears right now, and there's very few of them, because you can't hate on Nvidia when everyone loves it. Although if there was a time to say Nvidia's overvalued or maybe it's not the best risk to reward right here, it would be right now. But again, nobody's saying that. Same will be true for Tesla. It's easy to hate Tesla right now. But when Tesla starts to do well and people start to like Tesla again, well, that's a very powerful effect. Let me know what you think about this information down below in the comment section. Does this make sense to you? What is your opinion on Tesla and what's coming next? And do you think now that this litigation is essentially over with the shareholder lawsuit, that Tesla gets a new comp package, or Elon gets a new comp package, and starts to be a lot more constructive, positive to shareholder values? Maybe he starts to say the right things and stops the sabotaging of the earnings calls. Or do you think that's going to continue and Tesla stock's going to be down for the foreseeable future? Let me know what you think down below in the comment section. Hit the like button as well as subscribe to the channel if you guys want to come trade with us live in real time. Check that link out down below in the description of this video. Go ahead and follow the X account. It is Michael Tyler over there. Very easy to find, and that's free 99. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.